Hey there, welcome to the channel. So today I just want to go over what happened with the charts last week and see kind of what the setup is for this week. Okay, so we really, had a huge rally last week. That's for sure. I mean, just talking 1, 2, 3, 4 days of just straight up action in all the major averages. So here we're looking at the Dow Jones Industrials, kind of came up there pretty heavy duty like. We look at the SPY, another nice move on that too. And we could kind of take a look and see where the trend line situation is. I had drawn trend line something like that, where 1, 2, 3 hits there, didn't make it here. So it looks like we kind of busted through that. And also note that like here on the SPY, we kind of held the low. We didn't break through that new low. So that's kind of important. So in a way, look, it's like a bullish week for sure. I mean, it definitely was a bullish week. The volume on some of the days were, not so great, but look, you had that one big reversal day that it did give you some decent volume. So definitely kind of looked bullish. Now, the question is going forward. So I think the issue is in the short term, a lot of the uncertainty was taking out, right? Just the uncertainty, like the Fed raised rates, they did the 25 basis points. They're going to keep raising it. That's what's happening. There's a war in Ukraine. The West is, having sanctioning Russia, and that's causing issues with oil prices. Oil prices are still elevated. They've come off their worst levels. So if you look at the West Texas Intermediate crude, it had peaked out in the 125 range. And, yes, it came down back to 92, but it's back up at 102. Call it $100 a barrel, So oil is still elevated. I don't know if it's going to just go back down, but, I think if we look at this on a weekly chart, we can see that we're in a bigger uptrend here. So this thing is, as far as where I'm coming from, the move in oil is not over. We're in a bigger uptrend here before this happened. This little spike here, this is the Ukraine situation, right? But we were already in an uptrend. We we're already having higher prices. So you can imagine that. So this is the setup and this is the concern. You have a bullish week in the market, kind of looks good, or returning to the previous uptrend. We're not transitioning to a bear market. Maybe that's the case. And that's sort of, if I just look at the technicals, that's kind of what you can see. And that sort of seems the direction that things might go. But the counter to that is we still have the very high inflation. We have high energy prices, high gas, oil prices. We have high commodity prices, like wheat looks like this as well. And the situation is that from that fundamental point of view, this hasn't even been baked into the numbers. This will come up in next month's CPI and PPI reports. We'll see this spike in inflation. So you could just imagine like what those numbers are going to be. They're going to be horrible. In addition, the Fed is trying to fight inflation by raising interest rates. Now, the thing is, there's push and pull forces here. We have, like, the stock market, as I said, looking at it technically, it kind of looks okay. It looks good to me. It looks like this is a potential situation where we can have, just return to our uptrend. We had a correction and returning to our uptrend. So that seems fine. But we still have all the same problems that we have, even if the war in Ukraine, which hopefully it will end, they'll just cut some kind of deal and it will end, I hope. Even if that happens, you're back to the situation you have this like 10, 12% inflation. The Fed has to do something about that. You still have high energy prices baked in. You have high food prices baked in as well. And that's something that is an issue for the world as a whole. You have the sanctions going on. We have what literally appears to be a new iron curtain going up. And this one is a little different from the previous one. The previous iron curtain was initiated by Russia and the East. Russia, as the World War II ended, Russia took over all this territory as they pushed the Germans out of all this territory, all the way into back to Berlin. And then they took that territory and created the USSR from that. And they put an iron curtain down where basically, you can't get in, you can't get out. We're our own system, independent of the West. That's what it was. Now, a similar situation could very well be occurring. The West is sanctioning everything they can sanction on Russia. We're like trade, energy trade, everything, even banking, even like central banking. We're going to try to affect whether you can use the reserves. We're trying to put a new iron curtain up. Now, the result of that is, if this goes on much longer, then that iron curtain is going to solidify. It's going to take a long time to undo that. And this will be sustainably bad for everyone on both sides. Because look, you're going to have higher food prices. You're going to have this inefficiency. You're going to have excess food in the East. So we're going to have Russia over here, Russia in the East with Ukraine and wherever. They're going to have excess food, excess oil and gas, the barrels of oil and gas, and then we're going to have a deficit of food in the West and deficit of energy. And the result is that our prices are going to be high and their prices are going to be low. And what happens is, when you have this trade helps just normalize all this pricing. But right now there's an iron curtain coming down, and this iron curtain is initiated by the West. And so I hope that this doesn't last, because this will have a detrimental effect on the economies of the world for a very long time to come. So I hope that this doesn't happen. But so the point that I'm getting to is, behind all this stuff, in the very short term, the stock market looks technically like, hey, it's okay, we're returning to our trend. So it's rather bullish. It's like, okay, I would expect some sell-offs. This is way too strong a week next week, but let's go to the weekly chart and see where we set up. Hey, now we're getting back above important moving averages. Even if we just kind of like tread water for the next few weeks, it would just be a situation where it's a nice setup for us to just kind of tread water and just continue with the trend. So the dichotomy is that the market, on the purely technicals of just like what the average price action is, it looks very good. But the problem is all that stuff underneath, the high energy prices, the disconnect of the East from the West, all these things are lingering, and that is going to be highly inflationary for really the whole world. And so I hope that they can come to some resolution. And it's the one caution I have about the market. So in the short term, it makes sense, because it's like, okay, the Fed did a rate increase, did a rate increase by 25 basis point. They didn't do 50. They're going to keep going, whatever it's going to be, 7 or 9. And the market's like, okay, that's what it's going to be. Okay, fine. Oil is high, but it's off its, worst highs. So the market is like, okay, like in the short term, it's like, okay, that's fine. We know what it is. We know what's going on. Okay, oil's going to be high for now, but it's better than it was. It's not 130. Our interest rates, they're high, but look at, hey, 2%, whatever. Yeah, we're used to it. So from the market point of view, it's like, okay, all these are settling for now. But at some point, there's going to be a reckoning. And I'm not sure where it's going to show up first. I'm not sure if it's going to like be a month from now, or it's going to show up when the next CPI comes out, or is it going to be reports? Is it going to be an issue with, somebody's reporting earnings, and there's going to be like discussion of disruptions, et cetera. I don't know where it's going to show up, but most likely it's going to show up somewhere. And that's where it's going to look like being blindsided. And that's the only concern that we have to watch out for, I think, because you're going to be going along, you're investing, you're sitting there and you're like, oh, let's get back into electric cars, and let's get back into, our ARC K and all these guys. And sure, fine. But somewhere in there, they're going to get hit. There's going to be this like stuff that's going to come out of nowhere, and it's going to hit them. In addition, the other fundamental thing going on is we have China shutting down ports again. They're shutting it down because cerveza sickness, and they have this zero policy. Now, it's very interesting that this is happening now, and I have this is pure speculation. But do you think it's possible that the timing of this matches up with, if Putin held off his invasion of Ukraine till the Olympics were over in Beijing, because he held off because they're like, hey, we got this agreement. We want to let's hold off until that's done because it looks bad. Okay, fine. But is it possible? It very well could be, and this is speculation. I don't know. But what if China's like, well, we're going to just shut down all our ports? Because think about it from their point of view, that helps put pressure on the West. We're already having this issue of high gas prices, high energy prices, supply chain disruption, shortage of cars. There was announcements of factory closures because of parts due to this latest shutdown. So you kind of wonder, is it really that they're having an issue with a spike in cases? I mean, they probably are. Everyone has Omicron. Every human in the planet is going to get Omicron 50 times, whatever. But on the other hand, the timing of it is like, well, is this to put pressure on the West? Pure speculation. I don't know. But that's it for this one. Just food for thought.